Today, when investors look out on the economy, it isn't easy to be long-term optimistic. To be clear, I am talking about the economy, not financial markets. Financial markets have become completely distorted from underlying economic activity ever since central banks started to intervene in the markets whenever asset prices began to decline. But when one looks at the precarious US fiscal situation, the amount of leverage in the system, the high levels of inflation, historic wealth concentration, and rising populism, it's easy to see why many Americans are feeling pessimistic about the future. This is likely because the current system no longer serves most of the population. The American dream feels increasingly elusive. As a result, a feeling of hopelessness permeates our world. There is a growing sense that the current financial system is broken, leading to division and tension in our society. This is likely why nearly 80% of US voters, regardless of political party, agree that America is falling apart. Central banks and governments have done immeasurable harm with their decisions to saddle future generations with debt and keep interest rates near zero for nearly a decade after the global financial crisis. The result has been a highly leveraged, more fragile financial system that benefits the rich while hollowing out the middle class. America's middle class has been slowly shrinking since the 1970s, and this trend has only accelerated. Each time central banks and governments have intervened to save the day in the past, the debt in the system has inflated. This growing debt and accommodative monetary policy have a long-term drag on economic growth. It also results in rising asset prices, exacerbating income and wealth concentration. From $9 trillion at 2007's end, the US national debt has skyrocketed to over $32 trillion. To make matters worse, the Federal Reserve's decision to hike interest rates by 5.25% since April 2022 has caused the annual interest expense on the US public debt to soar exponentially. It is expected to surpass a whopping $1 trillion by the end of the calendar year. The takeaway: don't expect the government to curtail its spending anytime soon, especially with an election year on the horizon. The second strategy for governments to escape this debt predicament is to bolster tax revenues. But despite the ongoing spending, state and local tax revenues have declined annually at a rate not seen since the global financial crisis. State total revenue projections for the fiscal year 2024 are predicted to decline a further 1% year-wide. It's crucial to note that this reduction in tax revenues is occurring even as the stock market is making new highs seemingly daily. What happens when a recession comes around, asset prices fall, and tax revenues decline further? A third avenue for improving the debt situation involves the Federal Reserve reducing interest rates to decrease the interest expense on the debt. Also, the Fed could keep real interest rates negative and allow inflation to run higher, inflating away the debt over time. Nevertheless, the Fed has signaled its intention to maintain rates higher for longer as inflation has declined. Unless there are significant disruptions in the Treasury or labor markets, we shouldn't anticipate any rate cuts in the near future. So Congress continues to spend, tax revenues continue to fall, and interest rates are likely to stay around current levels barring some kind of deflationary impulse. All of this paints a dire picture of the state of the US government's fiscal affairs. This led to Fitch downgrading US debt to an AA+ rating, citing erosion of governance, rising deficits, rising government debt levels, fiscal challenges due to high debt and high interest rates, further Fed tightening risk of recession. To be running these levels of fiscal deficits with declining tax revenues, stock markets up, and the unemployment rate at multi-decade lows poses a question: what happens to the deficit if a recession does come around? Well, if history is any guide, we know what will happen. The Federal Reserve will eventually take the role of lender of last resort. The Treasury will issue a bunch of new debt, and most of it will end up on the Fed's balance sheet. In that scenario, the Fed and the government will flood the market with liquidity, and the release valve will, once again, be the dollar. In other words, inflation will return again with a vengeance. This will only worsen the long-term outlook for the economy and continue the worrisome trends that many Americans, specifically young Americans, are feeling today. Wealth will continue to be concentrated to a tiny portion of the population, The middle class will continue to shrink. The American dream will fade farther and farther out of reach, and tensions will rise. We are experiencing the end stages of the entire debt-based monetary system. The one asset that offers a value proposition of a brand new monetary system is Bitcoin. We are already seeing that play out today. Bitcoin has continued to impress this year in terms of price action and fundamentals. Bitcoin's hash rate has soared nearly 50% year to date. The number of addresses with a balance of over $1,000 recently hit an all-time high of $7.37 million. The total amount of supply held by entities considered illiquid is currently at all-time highs, with 15.27 million BTC. Investors continue to hold on to their Bitcoin. The fundamentals continue to paint a rosy picture for the new monetary system, just as the fundamentals for the old system are deteriorating. Bitcoin isn't just not going away, it's growing stronger every day. It is a function of the environment it finds itself in. Currently, debt levels are soaring. Politicians continue to spend and society suffers from these policies. Luckily, a new system that no one can manipulate, abuse or control is rising like a phoenix from the ashes. To be running these levels of fiscal deficits with declining tax revenues, stock markets up, and the unemployment rate at multi-decade lows poses a question. What happens to the deficit if a recession does come around? Well, if history is any guide, we know what will happen.